This afternoon, I have Tony Reda, who is the CEO, president and CEO, and also a founder of Tectonic Minerals. And the reason we're having this chat and we're having this discussion is a central theme through this conference has been early stage explorers with good cash positions now getting out and really beginning to look at the discovery potential of their asset bases. And I wanted to bring Tony back in to have a conversation about how do you build, and as an investor, how do you recognize a quality early stage exploration group that mitigates your risk from an exploration standpoint and also provides you the best opportunity to participate in discovery. This is really what this group of companies provide. And one of the principal reasons I brought Tony in, and Tony, thank you very much for being willing to participate, is that Tony and the group of people within Tectonic have really done this before in recent history with a company called Kaminak that made a major discovery, the Coffee Project in the Yukon in the last decade, and took it from a grassroots discovery all the way towards a sale of the company to Goldcorp, and with a price tag north of $500 million, if I'm not mistaken. That's a huge achievement. And so it's really worthwhile talking to Tony about what it takes to construct it. From a Red Cloud Securities perspective, we like this space. This is where investors get the most upside and the most participation in what can really drive share price performance. It's all about the Lassonde curve, if you want to put it in simple terms. Tectonic is a perfect example of a company that if it makes a discovery on its projects in Alaska, there's going to be very significant share price appreciation. We are advocates of companies of this stage, and we have specifically gone out and become advocates of it. And I thought it just ideal to have a discussion with Tony. So that's all the preamble on my side. Tony, let's talk about your experience. Let's talk about, first of all, the importance of people. You've done a great job assembling a good quality technical and strategic group of people within Tectonic. Many of them are from Kaminak. How important is that in the construct of a company at your stage?
Yeah, thank you for that, Andrew, and thank you for the opportunity to speak with you and the audience here today. I mean, the people, it's been said a million times, and I sound like a broken record here, but it's the only thing that matters, period. I am shocked by a lot of some companies have a different approach, and that's fine. But a lot of people or company creators start scouring for an asset, and then they start building a company around that asset. It's an approach that does work. I'm not saying it doesn't work, but from our perspective, we wanted to just not look at the acquisition side, but again, build a team that can acquire, can discover, can execute, can develop resources, and can actually put this thing into production. And that involves also the sort of maybe the not so glamorous and exciting stuff, the ESG component, the social, government, First Nation relations, the environment. That doesn't get your share price from 50 cents to $3, at first blush. It actually does when you look behind, start peeling the layers back. So I didn't want to be sort of the overnight success. I wanted, because those things, those are short-term lived, like you have a moment in the sun and then you're off to the next project. I wanted to actually, like other legitimate companies in other industries, like say, you know what, let's actually build a company that is all about the people. And let's look at all the different aspects of a company. It's not just the geologists. Yes, they're a critical component because we're here to find a mine, but let's look at the environment. Like, who's the best environmental person? Who's the best director out there, capital markets person? And we went through the whole list and we started slotting people into those categories. And that was all done, even prior to our first acquisition. Yes, we were a smaller team, but when we made our first acquisition, but then we started bolting on capacity with, again, the vision of building a company. So I think whether it's an investment side of things, and also for a company to perform at an optimal level, you're going to run out of steam if it's just based on a project. You have to have the whole enchilada. So that was our approach, and I think it's the right way to do things.
Great answer. So along with that discussion about ownership, always a discussion about people. There's always a discussion about ownership, and when I look at Tectonic, there's big ownership from management in this company. I mean, how important is that? You spoke about it yesterday during your presentation. Maybe it's worth talking about that.
It definitely is. So, I mean, where do I want to begin? So I'll use the most recent example of ownership in our company. Earlier this year, we invited in Alaska, they're called natives, but our native corporation that we have projects with, I invited them to become shareholders. This was a seed I planted a while back, and it resonated with them. They saw that the work that we did with the communities, they saw the way we were able to execute on the ground. And what I communicated to them is like, if you guys want a seat at the table, you definitely have that. But you can have more seats at the table as a shareholder. The shareholder is the ultimate voice. Our duty here is to work for our shareholders and stakeholders. And so having a voice, and obviously the more shares you have, you tend to have a louder voice. So ownership was critical at Tectonic, and we've purchased shares in the open market right through pretty much every financing. And we wanted to make sure that we had a voice and we had a say. I can honestly, for me, Kaminak Gold Corporation, I was the second hire of that company in 2005. The first hire was our CEO. And, I didn't have the wherewithal financially to build a meaningful position in that company. Yes, it was a win for me on many levels. I call it my university. But I was the longest serving employee of that company from 2005 to 2016 when we sold. When we were presented with an offer by a major mining company to purchase our company, my voice was there as an executive, but it wasn't the loudest voice. I didn't have that large, meaningful share position. So the shareholders, as it goes with any M&A transaction, speak and tender their vote. So, I learned from that experience that, I wanted to have a say, and the best way to do that is through meaningful ownership. And ultimately, whether it's on my side or the investment community or with the First Nations, they want to see that as well. Having skin in the game is worth every penny. So anyone out there starting a company, I would definitely, encourage you to put as much of your net worth into this company. And for me personally, I'm over $200,000. I have no problem communicating that. And that is my entire life savings. I don't work for a uranium company on the side. If you work for Tectonic, you're 100% Tectonic. All my ideas go into this company, and it has to work. I'm not going to let my capital disintegrate here. So, and that resonates with most shareholders. They want to know that you're fully vested, not only with your capital, but with your time too. And that question doesn't get always asked. Do you work for other companies? You wear multiple hats. Where do your ideas go? There's this common thing in the junior mining space where there's CEOs of multiple companies, and sometimes some people can pull it off. And but I question where do all the ideas and time go? Because I know how much time it takes to be a CEO of a company, and I can't even imagine doing anything else. There's just not enough time to juggle 2 or 3 companies, and let alone the questions of sort of morals and ethics on where ideas go also gets muddied with multiple vehicles.
That's a good point. I mean, maybe that's another thing that we could explore is management focus on one company, or are they focused on a silo of companies? It's always an interesting discussion, and I agree with you. There are different ways of looking at it. But we've got a finite amount of time, and I've got a lot more questions for you. The second question I've got for you is about project management. How do you start at an early stage in constructing a portfolio? What is your experience from the Kamenak perspective, and then looking at Tectonic. What has motivated you to pick up the projects that you've got in Tectonic, and how was that motivated from your experience in Kamenak?
Wow. Okay, we could be here forever talking about this one too. It's like you have a plethora of projects at various levels and degrees, stages, whatever else. So you somehow have to develop a filtration system that sifts all these projects or these opportunities. Sometimes the opportunities come up with just like, there's a mine over there and it's the only one. Why is that? And sometimes opportunities come across your desk. At Kamenak, we would come up with these generative initiatives, and kudos to the initial CEO Rob Carpenter for these. Him and I, and Craig Finnegan, our chief geologist, have to give props out to him. We would come up with these generative initiatives. One was Operation Boot and Hammer. The other one was Operation Head Frame. Best place to find a mine is in the shadow of a head frame. So you literally are starting with sort of concepts and ideas and thesis, and then sometimes, like the Coffee Gold project. Rob, myself, and actually Brent Cook were having dinner. We get a phone call from a CEO of another junior mining company to join him for a drink. It was at Roundup. That's what you do. And lo and behold, Sean Ryan was there. He's the original prospector from the Coffee Gold project, and he pulled out a map, and the rest is history. So you never know these opportunities, but the thing is, you have to be open to it. But secondly, you have to have some sort of filtration to assess these opportunities. Otherwise, you're spending capital and time in so many different areas. And, I can beat the drum all day long, and most juniors do on this, but, grade is king. Grade or high margin ounces, when you look at it even from an oxide perspective, it might not be the highest grade, but there's definitely margin there, and it's very attractive to mine those oxide deposits because they have a lower financial cost to put into production. Relatively speaking. So, we look at grade and we look at scale. Those are more specific to the project. I also ask myself, is there a linear, this is what I took away from the Kamenak experience and I applied to Tectonic. I'm like, is there a linear path forward? Am I chasing a geophysical anomaly in 1,000-meter depth below surface? What does it cost to drill it? What's the potential reward? And so I don't prefer that route. I prefer projects that have a linear path forward, that if I spend X, it'll yield this result, And we start mapping out the first 3 years without actually even acquiring the project. And the next thing we do, and usually it's done in tandem, I have our sustainability or environmental person start looking at the environmental issues. Or are there any issues? Is it in a sensitive area? Wildlife, caribou, fish, forestry, you name it. I won't go stake ground or acquire ground right next to a national park. You're just asking for a headache, and that there's so many companies that do that because they get fixated on the geological prize. They start advancing and then they're like, everyone acts like they're all shocked. Oh my gosh, it's not moving forward. Well, gee, you just acquire ground right next to a protected park. That's going to have some complications. Yes, some of them can be mitigated and managed, but we look at all that, and then we also look at the local communities and the First Nations and just the local citizens in general. Are they open to mining?
That brings me to my next question, and that's all about stakeholder relations. You're really getting into the next question I was going to ask, and that's about about the environmental sensitivities. We've talked about those, but there's also real social sensitivities. And so, talk to us about the approach you've taken with Tectonic, because it is unique, particularly within the framework of Alaska. You really stepped into an arrangement with a First Nations group, a lot of commitment, and talk to us about what that brings from a long-term perspective for Tectonic.
So as much as, like I was saying earlier, grade and scale drive our decisions, right along with that is the First Nations and the local communities, because there's countless examples that projects have been crippled or challenged or don't move forward, and rightfully so many times. So I believe in early engagement. Before we acquire these properties, we actually went, the four founders, we actually went down with to a local village of 200 people in Alaska and met them. And actually, talk to them about exploration because they didn't really know a whole lot about it. And we wanted to get a feeling from them whether or not they were open to it, and also what we could do for them. Instead of me telling them what I'm going to do for them, I actually asked them what kind of benefits would they like to see. Is it job opportunities? Is it education? Is it scholarships? How can exploration and mining benefit your community? And I think what separates Tectonic from other companies, Andrew, is that other companies do that at the tail end. We're doing it at the beginning, and we're not asked to do it. We're just doing it because A, it's the right thing to do, and B, the foresight to say, you know what? If we're going to invest this much capital and time into advancing a project, I want to mitigate as much as possible right at the beginning and not get caught with my pants down, metaphorically speaking. So I think those are some of the things that separate us on how we do things differently than other companies.
It really builds a trust relationship that can look beyond some of the challenges that develop later on and as you advance a project.
Yeah. You know, a lot of companies, they'll drill, they'll advance a project, and then they go to the locals or start, yes, they do it a bit earlier, and say, we got these are, but imagine going to them right at the beginning and say, hey, I'm Tony. We haven't even stepped foot on the project, but how can we work together to advance this opportunity? It's a whole different experience, and we were welcomed. And the relationship I have with a lot of the locals, I hold it dear to my heart. They're fantastic, and I actually hate when a project doesn't work because I'm like, how can we still bring benefit to these people because they were relying on this opportunity.
So you've got a portfolio of projects. Talk to us about what makes a successful early stage explorer. Like what approach do you take? How do you structure the information you acquire, and what kind of approach do you take that leads to a better or a more successful outcome?
I think you have to start, if you want to bake a good cake or make a good dish, you have to start with quality ingredients. I'm Italian by background, and everyone loves my mom's cooking, and it's so simple, but she starts with quality ingredients from her garden. And I think that's the exact same thing with a project. You have to start with quality things. So if you start with grade, you start with, do you see scale? How do you measure scale? What do you see? Do you see kilometer-long structures? Are you in a greenstone belt? We look at metallurgy right at the beginning. Is there coarse visible gold? Has there been any met work? Trying to get the ingredients for a multi-million ounce deposit. So, that's kind of our approach as far as assessing a project and then advancing. What makes a good explorer, I think, is the one that can cultivate all those ingredients, which also includes the locals and the First Nations, and then also steps back and doesn't fall in the trap with a shiny object. There's a couple pieces of rocks with 30 grams per ton behind me. You see an outcrop, like everyone goes to it, and guess what? The next explorer, because that company failed, dropped it, the next explorer does the exact same thing. And now you have a series of 5 historical explorers that have all chased the exact same thing. So our team, we try to come from a fresh perspective. I use the definition of insanity, doing the exact same thing, but yet expecting a different outcome. I'm like, what can we do differently on this project? Let's step back and not get fixated on the shiny object. Let's look at the plumbing of the system, what drove the fluids, what's controlling the grade, and use that to vector in. The next thing we do is, can we use new tools? One of our projects has permafrost, and shovel sampling is not the best tool to get through permafrost. So what can we do? We bring in new tools into the Yukon. We try to push the envelope on the technology side. Just trying to make things as streamlined as possible.
Great. Look, I've got one more question, and it kind of pulls everything together and synthesizes it. And it really comes down to, when does an explorer get recognized as making a significant discovery? I mean, you went through that with Kaminak. Maybe give a bit of insight on, from your Kaminak experience, what was it that really caught the attention of investors and really led to that major share price performance rise that was associated with what the market perceived was the discovery?
Yeah, great question. And the Lassonde curve, he's a very smart gentleman, and kudos for him, because that sweet spot is the discovery hole. Now, the markets can sometimes forget or not pay attention, and there could be a lag when that value truly gets identified. And in Kaminak, we went public in November 2005. Like I said, I was there from day one. We were acquired in 2016, but from 2005 to 2010, our share price went up and down. Yes, we had some other discoveries, like 1.2 grams over 50 meters at a project in BC, which is good. So our share price went from 25 cents to, I think the highest was 80 cents, and then in 08 back down to 6 cents. And then in 09 we acquired the coffee project. 08, so 8 cents. We went to 14 cents. We put some trench results, went up to 40 cents. And then that discovery hole happened in 2010. Gold was doing all right. The markets were in a different space. 08 was the crash. So everything lined up. And I think that's the missing piece from the Lassonde curve, which I don't know how you chart or graph that, but the market was ripe. And in 2010, we went from, 75 cents to $1.20 overnight on the first hole. We actually hit 17 grams or 15 meters on the first hole in 2010. We budgeted 2.5 million. We ended up spending 8.5 million. Sure enough, our share price goes all the way to $1.80, goes right back down to $1.20, but we had the goods, and then back up to $2, $2.50, and we announced our sixth discovery in 1 year. We went up to $3.40. It was double, 6.5 grams over 30 meters. I was in New York marketing at some very well-known institutions with our CEO, and we were like, oh my God, our stock is just like catapulted up. Well, you know what, Andrew? It went frigging crashing down afterwards, right? So that in that 2010 period, we went up to $2. The following year, up to, like I said, $3.60 shortly thereafter. And then, so that was 2011. Well, if you recall, 2013 gold crashed $400 in 1 day. I was actually marketing with Ira. She was a month on the job, Ira with Kaminak Gold, now the new CEO, and at the European Gold Forum. And our share price went right back down over time to $1.20, 80 cents. And then in 2014, we published our maiden preliminary economic assessment, very robust. Guess who comes into the stock? Ross Beatty, Lucas Lundin at 72 cents in 2014. And our share price went back down to 60 cents. And I'm like, we had Ross Beatty, we had Lucas Lundin, we had also Jamie Horvat, who was M&G at that time, our largest shareholder, who came in pre-PEA, by the way. Props to him for that. But, the life cycle of the share price, it's not always a straight line, and there's going to be these ups and downs. So we're like, man, like no one's recognizing the value here. Now we're worried we're going to get taken out at a very low level. Well, we brought in Electrum as well as another strategic shareholder. And sure enough, we started climbing back up in 2015, from 80 cents to $1 to $1.20. And then obviously the takeout was north of 250, I believe. So, where do you make the most money? If you have the patience and the endurance, the whole thing, you would have made, a significant amount of change. If you plucked it between 2010 and 2011, when gold was all the way up to $1,900, you would have generated the biggest return. So I too have to remind myself that's not a straight line. Last year we announced 6 grams over 29 meters, and the market yawned. No one knew about us. We just went public. And it's like, so you have these moments where, I think you need the product, so you need the quality results, but you also need the market to be in a healthy spot.
Good answer. And I think that kind of wraps up what I thought we could achieve in the time frame that we did. Tony, thank you very much for the opportunity to speak with you again, and for your insights on what it takes to be active in this space and to be successful. And all I can say is you've set Tectonic up with all the right pieces of the puzzle to be able to make those kind of discoveries. And I look forward to seeing your company evolve over the next couple of years.
I do too. Thank you, Red Cloud, and thank you, Andrew, for your time.